on the entire conflict which is taking place. We have Manpreet Gill, who is the Chief Investment Officer of Africa, Middle East and Europe, StanC, joining in now. Manpreet, hi. Thanks very much for taking the time out. Before we start discussing the scenarios taking place with regards to oil, etc., just wanted to ask you what might be your thoughts in terms of steel, because what we are seeing at this point in time in the Indian equities is that a lot of the steel stocks are sharply lower. Is there any kind of disruption that we could expect globally when it comes to steel prices?
Good morning. I think when it comes to steel, in fact, the broader commodity space, right? I think if you think about the conflict in West Asia and some of the disruption we're seeing around it, actually you see reports of disruptions across a wide number of commodities. And some of that is because of either commodity production or refiners in the region, or just simply the disruptions to shipping and supply chain. So while we don't sort of focus on steel specifically, I think the focus here, of course, is broadly across the commodity space and the room for disruptions. So I think it's all sort of linking to the story. Oil might be the simplest way to visualize and see in a single price what's happening in the commodity space. But I think it's about broader range of commodities and many of the inputs that go into it.
Manpreet, I wanted to understand, while everything is looking little dangerous on the side of investments, right? We are talking about markets falling across the globe, our sector is not doing so well. Is there anything which stands out right now? I know it is a difficult question to see some positivity here, but do you see anything like that? Any asset class that you think will do well from here on?
Of course, and I think when markets are volatile, we tend to focus on the risk, but that's often when you get some of the best opportunities as well. Look, I think I look at it in two sort of different buckets, right? I think in the very short term, we're in the middle of more of the immediate knee-jerk reaction. So for the time being, we're quite focused on hedges. And I think, broadly, we sort of put them in two categories. There's obviously the traditional ones like gold, which, of course, have shown some reaction, a bit of a pullback today. But we think they, of course, offer some protection against volatility continues for a few more days. But also, any kind of asset classes that are highly correlated to oil prices. Because in any kind of further extension of market stress, I think oil would be at the heart of it. So, for example, globally, we've been focusing on U.S. energy sector equities, but of course, at an individual firm level, there'll be many other examples as well. So those would be the immediate opportunity. Looking beyond that, of course, when you get a sell-off in risky assets, you have to ask the question, right, that, if this is not extremely prolonged, then, of course, sell-offs tend to create some long-term buying opportunities. So that's something we monitor globally. We are overweight still Asian equities, which have obviously borne the brunt of some of the sell-off pressures. So those are the kind of opportunities we'll be paying attention to.
Okay. Asian equities, if this doesn't continue for too long. Manpreet, a quick word in terms of oil side as well, right? Brent crude oil prices, obviously $80 around that mark is what it's trading at. But if this continues for longer than anticipated, what is the worst case scenario? And then what does it mean for Asian equities then?
So I think I like the fact that you use, obviously, how much longer this continues, because to our mind, the key difference between I guess a base case scenario versus some of the potential worst case ones is really about how long some of these disruptions sustain, and hence how long we see oil prices hold at an elevated level. Because at the end of the day, if we're talking weeks of conflict and disruption rather than months, then you could see many parallels to what we experienced last year around June, July, where oil prices rose, not quite as much as we've got already, but once tensions died down, we saw prices make almost a full U-turn back to where we started. You did not see an impact on inflation and asset price in that scenario. I think a downside scenario would really be one where these disruptions result in energy prices, oil and gas, really staying at higher levels, well above $80, potentially heading towards 100, but staying there for a sustained period of time. And I think the way I frame that is months rather than weeks. I think that's a scenario where you'll start to see more of the impact show up in worries about inflation, worries about the cost of obviously supplies, where there are large importers. That to us would be a worst case scenario. But I think there's at the moment still quite some time to go before we end up in that sort of situation.
Okay. All right, Manpreet, we're going to let you go on that note. Thanks very much for joining in and speaking with us and giving us your perspective in terms of what's taking place globally when it comes to the entire commodity setup. But the other aspect